Welcome to your weekly market update where we talk about everything mortgage and real estate related. We have some great information to talk about as always, so let's jump right in it. CoreLogic reported that home prices rose 0.2% in November and are now up 5.2% year over year. The November reading is another new all-time high in home prices. CoreLogic forecasts that home prices will actually fall by 0.2% in December and will rise by 2.5% over the next 12 months. Although they are historically very conservative. Based on the gains seen in the last 11 months of the year, the CoreLogic report is on pace for roughly 7% appreciation in 2023. I don't necessarily agree with CoreLogic that home prices will decline in December, especially after MBS Highways housing survey showed that the national home price direction increased 11 points in the month to 52, which is back in expansion territory. CoreLogic also reported last week that the loan performances in November was unchanged, but still remains just off record lows. Those 30 days or more delinquent remain at 2.8%, while 90 days remain at 0.9%, the lowest level in almost 25 years. Those in foreclosure just stayed off the lowest level on record to 0.3%. We should continue to monitor these 30 days or more delinquents, as a rise could be nothing or a canary in the coal mines. Now, as for mortgage inflation, last week, the Bureau of Labor Statistics reported that there were 216,000 jobs created in December, which was much stronger than 170,000 expected. There were 71,000 in downward revisions to the previous two reports, which tempered the headlines a bit. October was revised lower by 45,000 from 150 to 105, while November was revised lower from 199,000 to 173,000. Rates increased slightly due to this better than expected report. The Fed is looking for weaker job numbers to support a rate hike before June. Now, tomorrow morning, the big consumer price index inflation report will be released for the month of December. The market is expecting headline inflation to increase from 3.1 to 3.2 to 3.3. Looking at the core, which strips out food and energy prices and is the main focus, the market is expecting the year-over-year figure to decline from 4% to somewhere between 3.8 to 3.9. 3.8 would be great for rates. The MBA released their mortgage application data for last week, showing that purchases rose 6% and are now down 16% year over year. Refis rose 19% and are now up 30% from the same time last year. Interest rates remain right around 6.7% roughly, which is a 0.25% higher than this time last year. It's important to note that while these numbers are much higher week over week, they can be volatile due to the holidays. With rates staying steady and flat the last 30 days, it's created a great opportunity to set your budget to start the new year and get prepared for a strong 2024. Always remember, buy now and refinance later.